Welcome, everybody. This evening, we're going to be talking about how to profit from the next big short. Again, my name is Don Kaufman. You are watching a TheoTrade presentation. This is a risk disclosure. I spent the previous, 15 years of career in the brokerage world. We are no longer a broker-dealer. The next thing we throw up, of course, is a copyright disclaimer. This is ours. This is not yours. But really, I like to throw up our contact information here. If you ever need to get a hold of me or really anybody at TheoTrade, of course, we have the number right on the screen there, the 800-256-8876, or probably the most effective way to get a hold of us is support at TheoTrade.com. We use what we call kind of a common inbox. So please feel free to reach out anytime. Yeah, we actually do answer emails. I know it's unusual. This is a little bit about me. So again, my name is Don Kaufman. I'm the co-founder here of TheoTrade. I've been in and around the options industry since the late 90s. I started as a derivatives risk manager in Chicago. Only about 2 years into my career, I was invited to a startup brokerage firm called thinkorswim. I spent quite a number of years at thinkorswim. I ran their education division. We took the company public. Eventually, that public company, which was thinkorswim, was acquired by TD Ameritrade. I ended up running TD Ameritrade's client education group for both institutional TD Ameritrade client and the retail client for the better part of about 5 years before eventually leaving and retiring out of the TD Ameritrade world, and of course, launching TheoTrade. It's a little bit about a background on myself. I've done a couple of different CNBC tours. This is always one of the favorites, is if you're going to be pitted against somebody, you want to be pitted against Mr. Wonderful himself. With that, a little bit about TheoTrade. So we specialize in, obviously, education, stocks, options, futures, okay, even the currency products we will delve into a little bit. With that, we're founded by professional traders and trading educators. Everybody here on our crew has a minimum of 15 years of experience. A couple of us actually have multiple decades. And we're here, first and foremost, and this is something we're going to discuss tonight, help you mitigate the risks in the market and learn a skill set that can last a lifetime. The other aspect that I feel really strongly about here at TheoTrade, and I always like to enunciate, TheoTrade is not just myself. It's not just Don Kaufman. We have Jeff Bierman. Jeff worked side by side with me at TD Ameritrade for many years and thinkorswim. Jeff was also the chief market technician for TD Ameritrade, pretty highly coveted position. If you use the thinkorswim platform, Jeff actually helped build most of the charts. We have Corey Rosenblum, senior strategist and swing trader. Steve Slim Miller, he's got 43 years behind him, started on the Chicago Board Options Exchange when the SIBO launched all the way back in the early 70s. Last but not least, Tony Rago. It's our Nasdaq futures and intraday specialist. With that, we're going to jump right into it tonight. Risk and success. And as I said, we've got a lot to go through. I'm going to keep this at a very brisk pace this evening. So keep tuned in, turned on. Hopefully got a little bit of caffeine in you. This is actually a slide that I will use in many, many presentations. And it's something that I feel incredibly strongly about. In fact, this entire presentation is huge. Just huge. It's what's going on right now. This is one of the most prevalent topics in the entire marketplace. First thing we want to cover is risk and success. How you handle your risk is directly correlated to your success in the markets. Too much risk, you're going to panic. You're going to lose control of the positions, and you're going to continuously close the positions at the worst possible time. That's one of the aspects. I got to tell you, all the years in the brokerage industry and you're watching clients trade, when you have access and you run education for TD Ameritrade, 7 million clients, you get to see what 7 million clients do. Everybody panics at the exact same time. And I used to say, well, at least they're consistent with the panic. And I always ask that question. You ever had this happen to you, right? You literally close the position at the worst possible time only to see the markets turn around seconds thereafter. Which is going to help you substantially with that this evening. Get ready, it's coming. So we're about to embark on what could be one of the most pivotal periods in our market's history. Prediction of the risk is easy. Timing in the onset of the risk is absolutely impossible. And that's a very bold statement, but I'm going to qualify that here momentarily. So we need to think about how to kind of twist risk in our favor. Tonight, we're going to present a strategy whereby you can harness the potential afforded to us by the current market environment. And really specifically, I'm going to detail how you can put on a strategy, very little capital up front. You can risk a buck to potentially make $10 plus, and the upfront costs, again, are minimal in that particular strategy. And we're going to give you specifics of why might you want to do this, okay? In the next 45 minutes, you're going to see precisely the strategy, the plausible risks, how you can actually place these trades. Let's get into it a little bit. First, a review of a little bit about volatility or lack thereof, right? Volatility in the markets. So have you ever spent time really looking at volatility or the VIX? All right. How many of you guys actually look at the VIX? And we're going to make this relatively interactive this evening. So feel free to chat in. I mean, how many people have actually looked at the VIX before? And if you look at the VIX, it's something like today, literally today. It doesn't matter, today it's 12. Okay. And you look at the markets, compare what you think risk is in the markets versus where the VIX is. And the two, they almost like don't really jive together. You look at it and you're like, oh, this doesn't really make sense. First, what is volatility? What does it measure? And volatility most notably measures risk in the marketplace. So volatility equals risk. And when I say volatility equals risk, I'm actually talking about the options market. Now, there's going to be people that'll tune in tonight and they're like, I don't want to know anything about options. That's okay. But you should know, even if you're never going to trade an option, you should probably know that options are putting a price tag on risk. Option markets are trying to handicap risk to the future. And options, okay, the pricing is determined via market participants. There's just buyers and sellers. Ultimately, option pricing comes down to supply and demand, right? It's all about risk, and that's what volatility is. When you're looking at the VIX, okay, the VIX is not just, an equation. The VIX is actually buyers and sellers. It's buyers and sellers coming together and saying, like, this is what we believe risk is going to be to the future. Now, you take that risk and we call it implied volatility. Now, here's kind of a fun little slide, and I've used this slide for just years and years. This is kind of what I call the crash course in implied volatility. And this is where, why bother covering this? First of all, if you're attending this evening's webcast, we gave you a scan that kind of works on thinkorswim specifically about volatility, which I'll elaborate upon a little bit as we go along tonight. But just understanding implied volatility can give you some amazing, amazing insights as to where there might be, okay, this incredible opportunity in the marketplace, hence why I'm kind of covering it. So here we have an underlying, and this underlying is trading right smack at 100. Okay, and this is, again, kind of an age-old example that I've used time and again, but this underlying is trading right smack at 100, and it has what we call 20% implied volatility, which ironically is high right now because the VIX, all right, is at about 12. But what does that 20% really mean? Like, how do you actually put that into context of what the 20% means? And there's an answer to that. The volatility is kind of standard deviation. And what it effectively means, all right, well, is this, okay? It means that this stock, which is a $100 product, can move up about $20 or down about $20. Now, the volatility is always annualized. It's good for a year of time, okay? It's good for a year of time. But when you look at the marketplace right now, and the reason that I'm bringing this up early on, like, okay, so where are we going with this? Okay, if you look at the marketplace right now, the volatility of the overall marketplace, the volatility specifically of the S&P 500 is equivalency to 12. I mean, that means, okay, if you're looking at the marketplace, and the marketplace, let's say the S&P was at 100, that means that the S&Ps can only go to what? You're talking about like what? 112? Like, that's it? What? It's pricing a 12% move, okay? A 12% move for the entire what? For the entire year. Now think about that statement because it's a bold statement. Why? Because we've been moving around all over the place. Okay, we've been what? We've had, a 10% correction earlier in the year. We rallied back up. Okay, we barfed it back again. And I just can't stress this enough because the opportunity right now, okay, the opportunity right now might be to do what with volatility? You guys tell me. When you look at a 12 volatility, what might you want to do? All right? Anybody? Because again, this is the part where you start thinking ahead. And I'm going to come to that. I'm going to answer that question later, I promise. There's just simply no fear or loathing on Wall Street. And the degree of complacency in the markets, considering the myriad of tail risks on the horizon, is truly remarkable. Now, that's a pretty bold statement as well. The myriad of tail risks. What am I talking about? I mean, come on, we could go for like a half an hour on this, but all I'm saying is, again, I took this screenshot earlier today, and there it is. The VIX is sitting down at 12. Did we have a little bit of risk earlier in the year? Sure, it lasted 20 minutes, and then the volatility ultimately dropped right back out. But think about all the risks that are on the horizon. In fact, we're going to talk about specifically those. But I wanted to give you a quick screenshot of the VIX. Now, they got a lot of issues. Okay, we've got a lot of issues with you people, and there's a couple of warning signs ahead. So here's the horizon of risk. Well, so let's actually answer this question specifically. Is when you look at the VIX and it's at 12, and then you look on the horizon, what do you see? You see the FOMC and central bankers' interest rate policy is hawkish. What's hawkish mean? It effectively means, okay, they don't have your back anymore. And we'll talk about that. But central bankers, they're buying of corporate debts. There's $8 trillion of negative yielding debt. There's Chinese debt at 317% of GDP. That's a fun number. Chinese banking system grew at 1,000% in 10 years. There's 1.6 trillion in student loan debt. There's Brexit. Yeah, Brexit's still out there. There's global currency devaluations. That is happening. It's one of the reasons the dollar is going up. And to boot, trade war. I mean, I could go on for a half an hour about the horizon of risk. I think people get it. And yet, we see what? A 12 VIX. All of this doesn't matter because we have a 12 VIX. It's called suppression of risk. Now, I'm going to talk for just a moment about suppression of risk. Federal Market Open Committee meeting, right? So the Fed, central banks produce volatility suppression. Thanks to the central bankers, banks, proprietary trading firms, and hedge funds anywhere and everywhere in the world can borrow capital with record low interest rate. Even though interest rates are coming up right now, right? We're still at historic lows. So they're raising rates. We get that, but they're still at historic lows. The world's financial systems are just bursting with low-cost money. And in many circumstances, negative interest rate policy is forcing lending, and that's by design. So what this effect means is that you get trillions seeking returns. So the global financial system is just completely flush with free money, and it causes asset managers and traders to seek returns anywhere and everywhere. They'll just actually force, jam, cram, step on. The glut of capital is smashing volatility. It's actually forcing, again, participants, they throw caution to the wind. What do they care? And I really mean that when you think about, what do they care? If you're an asset manager, you know what an asset manager is? Somebody that might have, 5, 6, $10 billion under management. Most of that capital ain't theirs. In fact, the vast amount of asset managers, okay, their capital is minimal in comparison. That's not always true at a hedge fund. Some hedge funds, half the capital belongs to the hedge fund manager. Nevertheless, okay, the glut of capital just smashes volatility. And it's again, all about search of returns. You start to look into this, though, even governments right now are buying stocks. This is just getting to the insanity. The Swiss National Bank has gone as far as to print money in order to purchase stocks. They own about 90 billion in U.S. stocks. That's December 2017, and a guesstimated 20 billion or so in European. All right. They've actually bought roughly 17 billion worth of U.S. stocks so far this year. Sure, if you guys want this data, okay, we'll hand you these slides. They have got about $10,000 in U.S. stocks on their books for every man, woman, and child in Switzerland. I love that one. By the way, the Bank of Japan, they own 80% of all shares in Japan-listed ETFs at the end of 2017. 80% of all shares in Japan-listed ETFs. They're buying right now around 6 trillion, 53 billion annually. All right? They're basically going to be the largest shareholder, okay, in their largest company. It's like the same as like if the U.S. government was going out, let's buy Apple. No, instead, Apple is buying Apple with stock buybacks. But markets are completely irrational on free money, and money pouring into the financial system, it's inadvertently suppressed volatility. And it absolutely inadvertently, okay, kills price discovery. What you're getting right now specifically is a glut of people. For those of you that speak options geek, you're getting a glut of people selling options premium, throwing caution to the wind on a day-to-day, week-to-week basis. Believe me, you sell options premium right now, you're throwing caution to the wind, and that's one of the things we're going to talk about. But on a broader time frame, set aside charts and technicals. Fundamentals become meaningless. Why? They're buying back stocks. It's irrational with free capital. Not to mention, if you look at Europe, in Europe, the ECB, which is the European Central Bank, they're actually lending by going out and doing corporate debt buys. The European Central Bank, headed by Mario Draghi, is out there lending money to anybody willing to take it for next to nothing, which absolutely kills all fundamentals, and not just European stocks, because there are elements of that are actually flowing back into the U.S. financial system as well. But volatility readings, they're likely ambiguous at best. You just have no idea where they're really at because there's so much suppression, so much capital. Now, the writing's on the wall. Literally, the writing is on the wall. The FOMC is incrementally raising interest rates. The $4.5 billion, trillion, I get that one wrong all the time, but the $4.5 trillion balance sheet is being contracted. In fact, right now, they've actually clipped a few billion off of that. The ECB has also slowed the bond buying, and they actually ran out of corporate bonds to buy. And ECB is actually done, it looks like in September, okay? All monetary liquidity is either being slowed or is in the mopping up stages, meaning that they're actually hitting the accelerator in mopping this thing up. The Fed ain't got your back no more, and you are on your own. And you better realize that. If you don't realize that, have a quick look at this slide. This slide happens to be provided by none other than JP Morgan Asset Management. Give credit where credit is due. And here is the forecast reduction. This is actually the beginning of the reduction, which was at the end of 2017. Right now, we're right here. And this was 4.5 trillion. We're actually just north right now of about 4 trillion left on the balance sheet. So capital is absolutely being sucked out. By the way, this is mortgage-backed securities. This is treasuries. This is what the Federal Reserve balance sheet happens to look like. And that's just the Fed. That's not encountering, if you will, the ECB. All of this, though, you're looking at this and you're like, oh, okay, where are we going with this? Well, you think about it, and the bottom line is you better have some skills, and you got to have skills moving forward. A trader must acquire a skill set. We're no longer going to be in a market whereby monkeys throwing darts can be profitable. And you better realize that in advisors, mutual funds, indexing capital, that's ETFs, things like the spiders and the Qs, or a mix of bonds, are likely going to underperform the traders in years to come. All of this amounts to one thing. Suppression of risk presents an incredible opportunity. And that's the point I cannot stress enough. It is opportunistic. Don't look at this and be like, oh, I'm going to be sick. Okay, I don't go through this to scare people. I go through it because it's an opportunity, right? Risk is good. Recognize all of the issues, okay, for what they are. It's your opportunity. But you got to have a strategy whereby you can't substantiate inordinate risks, right? Yet you want to position yourself for an onslaught of volatility, all right? So one of the things, I got to say, one of the things that I've seen a lot of traders do, and specifically do in the last couple of years, is they just go out there and they get outright short. What does that mean? It means they pray that the market goes down. But if you get outright short and the market keeps kind of stair climbing a little bit higher, you're going to be forced to do what? Cover. And as you cover, what does the market do? Spurts higher, because covering is buying back, okay, you're short. So you cover, we spurt higher. You cover, we spurt higher. Somebody else comes in, shorts up here, and we're cyclically heading a little bit higher. You do that, it's going to be a painful lesson to learn. I want to put it, as I say, bluntly, very bluntly. We want to buy volatility. I want to buy volatility with both hands. I want to buy volatility as we believe the future market risks are going to be formidable. But I'm telling you right now, you cannot time the onset of risk. If you think you can, all right, it's crazy. I've been trying to time the onset of risk for 2 years. I've been trading for 20 years, but you know better. And you have to actually create a strategy to where you can actually sit back and say, oh, it didn't happen this time. We'll get you next time around. And, oh, it didn't happen this time. You can't put a lot of risk on the line. Even if you do not believe the risks are forthcoming, you still need to accept the relative dangers and mitigate your exposure accordingly. That's one of the big statements in here too. I'm not telling you like, oh, the world is going to come to an end, but the risks are clear and we can see the opportunity. Yet, how do we go about buying volatility? All right, I'm asking that question for you guys. And again, these are not rhetorical questions. You might be watching this on a recording. Answer it. Get in there and be like, this is how I want to go out and buy volatility. This is what I want to do. Okay? You can buy volatility-based ETF products. It's common knowledge. Common knowledge. We can buy volatility products in today's marketplace. However, volatility-based products are absolutely riddled with failure. Absolutely riddled with failure. If you haven't looked at this, volatility exchange traded ETFs, right? So exchange traded funds. Let's look at two prominent volatility ETFs. One of them happens to be the VXX. The other one happens to be the UVXY. Many people have bought this and died trying. Many people have bought this and died trying. Why? This is the VXX over the past 2 years. So it's fun if you're into charts. We started here and now we are here. Here being it's down 83% of its value. Listen, this is a 2-year, 1 day. It's daily charts, just a 2-year chart. Why did I pick 2 years? I don't know. 3 years was just completely ridiculous because, basically it's losing all of its value. And then they even had to change how the VXX works because it was such a failure in the beginning of this year. It was such a failure at the beginning of this year, then it spiked up. They actually changed how the entire product is even structured because it was the biggest failure, okay, in terms of volatility products. Then if you look at the UVXY, it's at a complete death spiral, okay? Again, this is a fun one. It's was at 681. Again, this is 2 years. It's lost 98% of its value because now it's here. I just wanted to show it was here. Okay, even with the big spike in volatility, everybody's like, oh yeah, in the beginning of this year, it got crazy. It's like a little tiny blip on the radar. It thought about going up. I think it moved. It barely moved. You buy these products and you have to recognize, okay, you're just flushing your money. You're just flushing your money down the toilet. Okay, you can't succeed buying volatility outright. You now got to be smarter. You've got to be smarter than the competition. And it's actually one of the reasons, and I'm going to deviate for a second here. It's one of the reasons that we included in tonight's session, we included a scan. And the reason I included a scan, and hopefully this works all right, but we included a scan, and I'm just going to freeze my screen really quick, and hopefully you guys can see it all right. In this scan, what it is designed to do, okay, is to look for products that have, in effect, higher volatility. So the scan is designed in just weekly options. And I'm just going to take you through it because this is just a quick scan that we threw together to prove a little bit of a point. So it's a scan for weeklies. Now I'm looking for volatility north, okay, of 50%. You're like 50%. 50% implied volatility, which is not that crazy. You think about like Tesla, you're like, oh, Tesla's volatile. Oh, it's not going to be on this list. Okay. Oh, this is volatile. Oh, it's not going to be on that list. And then we look for what's called an IV percentile. And what an IV percentile does, it says if volatility is high, okay, is the volatility itself high? Sorry, I'm flashing over here. Is the volatility high, okay, on this particular product, meaning that, okay, its volatility unto itself. And last but not least, does not have earnings. Does not have earnings anytime, okay, in the next 20 days. Now, obviously, a lot of underlyings have earnings right now, okay, but I just wanted to run the scan with you really quick and show you only one product, okay, out of hundreds and hundreds of products even populates in there. What that scan is designed to do, and I apologize for pulling that up, it flashes the screen a little bit though. What that scan though is effectively designed to do is, again, we're looking for, I'm going to make this a little bit easier to see because I think this is such an important concept right now. We're looking for volatility to be north of 50%. Then there's what they call a vol rank. We wanted that north of 60%. What that basically means is you're looking for a high volatility stock, and then you're looking for volatility to be high on the high volatility stock, right? And then on top of it, I put in does not have, okay, earnings. Why do I not want earnings? Because earnings actually can make volatility look artificially high. And what happens when you run that, and I ran it on hundreds and hundreds of products, what happens when you run all of the subset of the criteria, you know what happens? Okay, nothing shows up. And when nothing shows up, it makes it an incredible opportunity to be a net buyer of volatility. That was actually, okay, kind of the impetus for me putting together that particular scan. There's a bunch of things you could do though with that scan. You could also use that scan to be able to sell option premium. Clearly right now, the market's telling you something, okay? It's telling you you want to position your portfolio for a big move. Let's get down and dirty. How do you position yourself most effectively for the possibility of an extreme move without exposing yourself to drastic risks? Now, I don't want to get cute. This is serious. There's a lot up for grabs when you think about positioning yourself for volatility. We come into what's termed a risk twist spread. Now, I have been employing this strategy and variations of this strategy for many years. It is a well-tracked and tried and true strategy. You'll employ a ratio type option spread. Now, I said the O word. Like, again, people get really nervous when he mentioned options. It's an option spread, okay? And in this option spread, we call it a risk twist spread. The idea of the spread is very, very easy. We want to achieve just a maximum reward for minimal upfront cost, okay? What you want to do with what we term this risk twist spread, and I'm going to take you into some highly detailed areas of this, but what we want to do with this risk twist spread is limit your exposure, maximize your potential, okay? We want to, again, minimal upfront cost. Why? Because in this particular strategy, are you going to be right? Is that big, huge move going to happen the first time you put this thing on? Absolutely not. But what if we were able to put on something that had such minimal upfront cost that it didn't matter, that we could put it on in Q1, we could put it on in Q2, we could put it on in Q3, we could put it on in Q4. And let's say only one time, okay, in an entire year, the strategy pays off. But if you're risking 1 to make 10, does that work? If 4 times in a row, okay, maybe on the 4th time, you got to realize you're literally going to be risking 1 to make 10 or 10 plus. Is that worthwhile? All right, these are not rhetorical questions. Again, jump in at any time. Let's actually take a detailed look at this particular strategy. Now, this is the risk graph, and I always present the risk graph of this particular strategy first. And this is a strategy, again, that we've been employing time and again. If you take a look where we're currently at on the spiders. Now, this happens to be the spiders, okay? The spiders are trading right up here. In fact, I'm going to switch my drawing tool. I'm going to make this even clearer for everybody. So the SPY is right in this neighborhood over here, and its SPY is trading at right around 280, right? So the SPY is trading right at about 280. What the strategy in effect does, you can see very, very minimal risk. Look at this line, okay? That line assumes that the risk in the trade is mild, maybe $100. Now, this is only one contract worth. It literally, this is a risk graph for what we'll call one contract, okay, of what we call an RTS. What does RTS stand for? Risk twist spread. Okay, it's a risk twist spread. And the risk twist spread is incredibly sensitive, okay, to violent moves to the downside. Now, you can use this strategy, okay, for 2 different areas. You can use it to profit from a massive down move, or you can use it as what we term a hedge. What's a hedge? You may have a portfolio, and that portfolio could be stocks. Maybe you have a 401k, right? If you have a 401k, this strategy, okay, employed correctly, could possibly hedge it. Look what occurs, all right? Again, this is one unit. Anybody pretty much with any account size can employ this strategy. And of course, people always ask, can it be done in an IRA? Yes, right? IRA equals yes. So you can, of course, do this in an IRA. Now, let me just clear the screen for just a second and get into this with a little bit more depth. If you just take a quick glance, now I'm showing the market possibly backing off big. This is extraordinarily conservative estimates. The marketplace backing off anywhere from 7 to 8% during the life of the trade, okay, should see approximately a risk 1 to make 10. All right, so you'll be risking basically $1 to be able to make 10 with a 7 to 8% sell-off in the market. But in what time frame? Well, the trade is typically good for a period of up to 3 months. So the trade is on for the next 3 months. Can the market back off 7 to 8% inside of a 3-month window? Of course it can. Absolutely. And that's one of the key points. And this is where, a lot of people get a little stumped maybe, on the option strategy. All right, and they look at the risk graph. They're like, well, the risk graph looks pretty good. Listen, okay, the market tanks, this thing explodes. Now, inevitably, somebody asks, well, could you do this on the bullish side? Yeah, the bullish side's even easier. Okay, the bullish side's absolutely, you could do this on the bullish side as well. But when I teach it, I think that most people respect the fact that there's a horizon of risk out there right now, and we don't know exactly when it's going to come. But you kind of feel like right now in the marketplace, it's lurking. Now, let me actually get to some of what we call the characteristics of the risk twist spread. And more importantly, let's actually show you one. This is a risk twist spread and the debit and everything there is to know about it. Okay, first of all, this thing has increased value when exposed to heavy volatility. Plain and simple, you get volatile and it gets on fire. So it's what? Increased volatility. All right, really kicks the risk twist into high gear. So increased value when the market sells off, significant profit potential, okay, in a downside market move. Theoretically, you could put it on to the upside as well. Loses minimal capital if the markets rally. Listen, could we continue to rally? Yes, and as I said, we could rally quarter after quarter after quarter after quarter. Loses minimal capital if the markets continue to drift. We just drift sideways, it's okay. What are you going to lose? Well, I lost $100. Well, in this particular case, look, the actual trade would cost us $122. I'll even talk about the risk in there. Need only be placed a few times a year, right? Let's put a number to that. 4 times a year if you know what you're doing right. This is the perfect spread to reduce risk of a stock portfolio. That's what I just said. This can actually be used as what we term a hedge. That's not the bush out in front of your house. That's the risk twist spread right in front of you. It's an excellent tool, though. Also, for those of you, if you're just you're sitting there with an account right now and you're kind of scared and you're sitting there, you're like, the market could really sell off. It could sell off big at any moment. So you're sitting in a lot of cash. You don't have to put necessarily a huge amount of capital into this thing to get it to work. But the risk twist spread can be there for you. And maybe you put a couple of $1,000 a quarter into this thing. And I'm going to tell you right now, it can pay off absolutely phenomenally. Let me actually get into the context of what the trade is. For those of you that speak option geek, fine. And I'm going to tell you right now, listen, what do we do here at TheoTrade? Okay, well, we teach classes. One of the classes that we teach happens to be specific to the risk twist spread. In the first few minutes here, I'm literally showing you the exact strategy. But what you really need to learn is the criteria to be able to put this strategy to work, to build the strategy. Right? And you never want to let options intimidate you. In this particular strategy, the key to it is we are selling options to the finance. Okay, we're selling an option here to finance the purchase of 3 more options and then selling another option to help offset the cost of the options that we're buying. I mean, that's it. And people look at like, oh, there's risk in here. I can actually show you, you can literally mitigate the risks to the upfront exposure, which is right around $1.22. Now that's $1.22. And again, this is just one contract worth. I know it's a 1x3x1. And inevitably somebody says, what about commissions? I'll tell you about commissions. We actually have a deal with several, of the major brokerage firms. Remember, that's where I came from. I worked in the brokerage business side of the business for almost 15 years before we actually launched TheoTrade. We had enough of the regulation. Actually took a couple of the people from TD Ameritrade. We opened up TheoTrade. We're like, this is better. You don't have to answer the SEC. You don't have to answer to FINRA. You can actually teach people not only about the right strategies, but actually we can teach criteria. We can teach you exactly when to put these things on, when to take them off. We can say things like, don't do that, or that's a really good idea. You just can't do that in the regulated world. The risk twist spread, though, talk about feeling strongly about something. It's why I wanted to host, this webcast right here, right now. Because when I looked at that implied volatility scan that we talked about earlier, nothing comes up. It tells me right now, I want to buy the heck out of volatility. Buy vol like it's going out of style. This is how you buy volatility. Now, when you look at the risk twist spread, okay, as I mentioned this earlier, in building a risk twist spread, just do not let the option side of the market intimidate you, okay? And I tell everybody right now, listen, you can't get everything, in 2 seconds over here, but don't let options intimidate you. If you give us a couple of hours, and sure, we have classes. I mean, what do you think TheoTrade does? Okay, we've got a number of classes, a large number of classes, but we teach, classes in things like the risk twist spread. This spread's being done for $1.22. Okay, but a spread like this, it truly is, okay, analogous to a massive chainsaw. It is absolutely a massive chainsaw. If you use something like a risk twist spread correctly, and you can see this risk twist spread, just so we're clear, is all the way out in October. And I built this one today. It is viable, okay, but I'm going to tell you, it's a massive chainsaw. And if you're going to use this spread, yes, I would love you to go through a class and learn the right criteria. And if you've never heard that word kind of criteria, it's the recipe to be able to build the trade. I would much rather you go through a class, okay, learn the correct way to do it. And that's why we do this. But at the same time, okay, why do I give you the strategy? This is the strategy, okay? And this is a spread. You want to put it on? Put it on. But you need to learn, okay, how to effectively create returns with it. You need to know when to put it on, how to take it off, okay? But used incorrectly, you're going to cut off a couple of fingers. You have to know when to exit this trade. That is the most, okay, essential aspect of this trade. You need to know when to exit that spread, okay? And again, I got to stress to you right now, and somebody was asking about the buying power in here. The buying power is minimal. If you do one contract, and I'm going to back up for just a second and show you this because such a good question just came in. You do one contract of this, one unit. Now that one unit, okay, when I call it one unit, it's one contract, okay? That one contract will tie up about $1,000 in your account. Now, anybody, okay, to trade options, you pretty much have to have a minimum of about $2,000 in the account to be able to trade options, unless it's a cash account. Most people are pretty comfortable with that, but a 1x3x1, 1, 3, 1, okay, this, whoops, that's supposed to be a minus. This 1, 3, 1, okay, will not tie up more than $1,000. And one contract, if the market tanks, is going to make in excess of $1,000. But just because this strategy ties up $1,000, we're going to actually show you how you do not ever have to have that amount of risk in the strategy, okay? You do not have to have this huge amount of risk, and everybody that understands options will get that, okay? Fear not the risk twist spread. Again, you may not know options. You have limited experience in placing option trades. That's fine. As I said, that's what we do here at TheoTrade. We do classes, and we could show you how and when to place risk twist spreads in a matter of a few hours. All we do is create really detailed recipes for every strategy, okay, every nuance of the trade. And the analogy for this is it's baking a cake. Trading is baking a cake, and you literally have to go through, especially with something like a risk to a spread. You got to go through a checklist. You got to go, do I have the right strikes? Check. Do I have the right, expiration? Check. Have I taken the trade off? Check. All of those, okay? All of those happen to be criteria. You want to learn how to buy a risk twist spread and how to control your risk the right way? Let's discuss some of that criteria. So what we do here at TheoTrade, it's recipes, it's criteria, it's what we do. Trading, you'll find this out if you're in this business long enough, but trading's all about answering the what ifs, okay? What might be a good stock or ETF candidate for a risk twist spread? I got one for you right now, okay? Now, you just saw me built one. I built one of these spreads in the SPY, but I got a better one right now. It's the XLY. For those of you that ever tune into our afternoon or evening videos, the XLY is possibly the best for a risk twist spread I have seen of any product ever. Okay? It is phenomenal. I just don't know when it's going to pay off. I told you I don't know. Okay? But then you have to know what's the correct options expiration cycle to buy my risk twist spread. How much capital do I commit to these trades? right? I mean, they're twisted trades. How much capital? What strike price options do I sell and how many? What strike price options do I buy? And you think about that. Again, the complexity of the trade, it's not that bad. But if you want to build one of these beasts, and I got to go back again to this, you want to build one of these beasts that can explode, you have to be dead on in which options you buy or sell. Okay? There's not room for error. That's why there's criteria. Okay? It's all about answering the questions. What's the right probability? How many option contracts? When do I close the trade? What if the stock sells off big? What's the correct return for the strategy? We have the answers to all of that. All of the trade-related questions. Okay? Definitive criteria and specifically a checklist. Each strategy, each unique variable that you're going to encounter is covered. It's the how, it's the when, it's the why, it's at what price. It's just the beginning, though, of the variables you're going to face while buying a risk twist spread. And I want you to know, okay, again, the secret in here is really in the sauce. You know, everybody thinks to themselves, I can read about spreads anywhere, and you can't just go out and do one of these. We spent years fine-tuning this trade. Literally spent years. Okay? When you approach the section on criteria, you follow the criteria, you follow the steps. Okay? And if you want the criteria, obviously, go through the class on this. If you want to see a risk twist spread in action, this is what it looks like. Okay? This is a risk twist spread. This is from my own account. Many of our clientele here at TheoTrade embarked upon the exact same strategy as me. We have over 2,000 members of TheoTrade, okay, of which we email out trades, meaning things like risk twist spreads. Gladly will email this out. This is one that we actually put on, okay, unknowing that there was going to be volatility. People, we just put the thing on a quarterly basis, and we close it on a quarterly basis. Win, lose, or draw. This is a SPY opening position, but in this case, I put it on January 17th. Okay, that is the precise debit that I paid. Only thing I like to hide in here is the contract size. I mean, listen, how much size that I use, okay, is going to differ from you. I know people like to stand up, I made millions in some trade. Okay, get over yourself. I paid $1.37 debit. I closed the thing for over $10 credit. Okay, the trade was on for less than 1 month. That is what I mean with about risk one to be able to make, all right, 10. And this one isn't, okay, the prime suspect in terms of, products that have gone off and gone off big. This is just one of them in the spiders. But the reason I brought this one up, because it's fairly recent. You only need, okay, one of these to work in several years for this stuff to pay off. Think about that for a second. You only need one of these to work for years. These are the exact strikes I used. By the way, again, if you're unfamiliar, this is actually the trade history specifically from the thinkorswim trading application. The exact time the trade is placed. This is actually in mountain time. The time we placed the exit of it, the debit we paid, the credit we received. Everything is in front of you. That's what a risk twist spread, though, looks like in action. This is the curriculum to a class we call the Next Big Short. Okay? Now, we teach you, literally, verbatim, how to construct a risk twist spread. All right? From soup to nuts, we'll actually help you build your own risk twist spread, detailed step-by-step entry and exit criteria. Now, listen, I could give you trades all day long on this front. Literally give you trades all day long, but you still have to understand. Why? You have to understand the strategy, because if you want to learn this, you got to learn to hedge your portfolio from pending market turmoil. Okay? You're going to learn in this class to read market risk like never before. I'm going to show you things about volatility you never even dreamed of. Okay? The only thing we see is risk. Learn how to profit from an onslaught of volatility. What is volatility? How you can actually profit for changes in market volatility. Discover how to create trades based on movement in the market volatility, not just direction of the market. Part of this class, okay, in the Next Big Short curriculum is about market volatility. It's not just about direction of the marketplace. Learn why implied volatility, okay, what it is, okay, and really how to take advantage of it. All right, we're also going to teach you when vol is low and vol is high, really effectively when volatility is low, not just looking at the VIX and going, the VIX is 12, it's time to buy. Okay, trades can be done in retirement accounts with minimal capital, with minimal options experience. Okay, smaller accounts that are looking for huge upside potential. We do it all, and that's what we do here at TheoTrade. The class, okay, is the next big short, aka we call it the risk twist spread. I'm the trading instructor. The class is available immediately with 24/7 access. The class slide deck that has all the criteria, all the entry and all the exit criteria, it's available for download, okay, immediately, okay? And the class happens to qualify you right here for a reduced commission rate. Now, the class itself, you can go in, again, you can start watching the class this evening, it's $197. However, I'm going to show you something I think you guys are going to find quite entertaining on this particular front. And bear with me, listen very careful right now. You want to go to the risk twist spread class, and believe me, we want every single one. Clients, those of you watching, okay, this evening on a webcast, you're watching this recorded, we want everybody to go through this class. We want people to use these strategies and want them to use them correctly, okay? But I also recognize you've been there, you've done that. I mean, many people that tune in, okay, come on, you've been through the Gauntlet of Classes. Just tell me in the chat room. By the way, I don't care. You guys might be watching this on a recording. Talk to the recording. You've been through so many classes, paid classes and indicators and secret squirrel black boxes, and only to find, just buy with this one last thing, okay? I mean, it's one of the reasons that we do what we do, okay? But wait, there's more. At TheoTrade, we've just had enough of the educational garbage and the educational sales pitches, and we intend, okay, quite definitively to put an end to all the sales related crap that's out there. Okay, we're professional traders. We built TheoTrade because education is what we did in the brokerage business 15 years and just couldn't stand the regulation anymore. Now we are fully intent on disrupting financial education. Built by professional traders. Everybody's got a minimum of 15 years of experience. Nobody here was a professional salesperson, ever. Nobody ever sold any products, okay? Nobody. Educating you is our only goal, and we're going to demonstrate just that. We're going to change the way that you view education, introducing what we call TotalTheo Unlimited Streaming Monthly Service, okay? And what this is, it is a monthly membership. I don't like membership. That's okay. Let me show it to you. Unlimited. It's only $99 a month. All we do, okay, the next big short class, it's included in it. In fact, everything that we do here at TheoTrade is included for $99 a month. It gives you access retroactively to every class that we've ever done. And they're all available immediately on demand. We also have new monthly classes. Every single month we do a class. Most months we do at least a class, but we're averaging closer to 1.5 classes per month. In addition to that, by the way, this is all $99 a month. So I just want to be very crystal clear. Because a minute ago, everybody's looking at $197 for a class ain't bad, right? Think about that. $197, that ain't bad for a class, okay? I'll pay that for the risk twist class. Yeah, how about though, at $99 a month, we give you, okay, the big short class, which is the risk twist class, and we give you access to 70 other trading classes. It's overwhelming, but I don't know. Would you rather be overwhelmed than underwhelmed? Some people are going to say, oh, I'd rather be underwhelmed. Fine, pay the $197. Go to the class. But we can give you everything for $99 a month. We also, as I said, okay, new monthly classes. There's a live trading chat room. It's just traders. We do 5 hours a day live. Now, not everybody can attend live. I get it. All of this is archived. So every single day we broadcast for 5 hours. You don't have to watch all 5 hours. It's okay. All right, we just broadcast live. I'll show you what it looks like. We also have indicators. Indicators and scans. 57 proprietary indicators and scans. Proprietary indicators. I'll show you exactly what that means here in a few moments, but we have some really cool codes that we've written for a number of major platforms. We also email out trade ideas. We have daily coaching sessions with timely topics in stocks, options, and futures. Oh yeah, and we answer your trading questions via email or live, okay, within the chat room. The web address for it's theotrade.com/all, okay? All of this amounts to one thing. It's as if we're giving you $100. Take the money. Take the money, okay? Everybody asked that question, and I'm going to give it to you right now. Can you just sign up for the class? Yes, okay? It's $197, okay? It's a one-time fee, and it gets you the big short class, right? That is the RTS class. Okay. Then you can look over here. This is TotalTheo Unlimited Streaming. It's $99 per month. First question that always comes up, it's a membership. Can I cancel at any time? Of course you can. And you need to know that. All right. You don't have to have, it's a 2-year. There's nothing like that. It's $99 a month. Okay. That'll give you the Big Short class. That's this class. Okay. It'll give you also over 70 classes, new monthly classes, the live trading room. Everything's archived 24/7. We'll email trade ideas, trading indicators and scans, daily coaching sessions. And people look at this and they immediately say, why are you doing this? Why are you giving me a class for $197? Okay. Or I can get everything for $99 a month. We're doing it. Okay. And we're willing to what? To give you a $100 break. Because why? Well, because we know once you become a member, you're going to love it. You're absolutely going to love it. You're going to end up staying for a long time. I'd rather take a $99 per month. Forget like a one-time fee. Forget this a la carte class crap. And there's another class, and I'll charge you for indicator. It's $99 a month. Okay? That's the education. That's what we do here at TheoTrade. And again, I'm actually going to throw up the web address. It's theotrade.com/all. And you better believe I feel strongly about this stuff. And I'm going to show you a couple different things on our site. This is the TheoTrade site. This is what it looks like. Okay. This is just happens to be, it's off air right now. This is where we broadcast. We don't use any crazy stuff like GoToWebinar. You get on our website, we start streaming. Here's the chat room. Okay. I mean, this is the chat room, and there are hundreds and hundreds and hundreds of people that chat in here throughout the course of a trading session. You get to talk to them. We get to talk to you. It's a party. But then what else do you have access to? You know, you can hit start here. You know what start here does? Start here is, I'm a little newer to this, and I'm maybe a little bit intimidated right now by listening to some of it. There's options 101, okay? Options 201, options 301. You have access to everything we've ever done in the archives. And this is where, again, I say, you're like, is it going to be overwhelming? Listen, people, we have absolutely nothing to hide. We give you everything from day one here. We even have searchable archives. You can go to the member home. And by the way, the member home will even teach you, okay, there's a video right here of how to use the site. You can come in here, though, and you can type in, like, I want to know about capital allocation. I want to know about implied volatility rank. I want to know about probability of touching. I don't even know what probability of touching is, okay? Well, guess what? There's a happy hour in probability of touching. There's, you know, the many applications for probability of touching. Again, we can go on all day about this. Then somebody says, I want indicators. Yeah, here's shared charts, scans, and studies. You click on that, and it'll actually give you definitive links to the shared charts, scans, and studies. Then somebody says, I want to know more from Jeff Bierman, or I want to know more about the archives. Okay, it's all here. But then the ultimate surprise, the class archive in here, you realize the class archive, let's just talk about option strategies. If you just want to learn about option strategies, okay, here are the classes. All of these you have access to. And you're like, well, what can I listen to in a month? As much as you want. Start streaming, okay? Start streaming till your ears bleed. You're going to love it. There's so much, okay, in here. Again, I think for $99 a month, you'd rather be overwhelmed rather than underwhelmed. Maybe you're into day trading. Good, we have classes on that. Futures, absolute experts, okay? We actually hired individual instructors in each genre of trading. Okay, we even do like daily Theo Dark reports. Corey's got a report. Corey Rosenblum, access to the archives, nightly videos. Okay, you name it, it's in here, and it's all encompassing. Okay, and that's what we do here at TheoTrade, and that's why, you know, hey, if you want to go out and buy a class for $197, have at it. But I think people are really going to appreciate what we're doing over here. It's TheoTrade.com/ALL. Again, it's TheoTrade.com/ALL. Now, I'm going to answer a couple of questions on this front. Everything, okay, is included at $99 a month. There's no ancillary fees. Now, one of the questions that inevitably comes up, and I'm going to hit this right now, let's hit it head on, is somebody says, can I cancel anytime? Yes, it is a membership, but you could cancel at any time. That's important for us to distinguish to you, okay? We also, when it's a rare occurrence, we actually email you before we're going to bill you. Why do we do that? Just to make sure you want to do it, okay? Listen, people love what we do. We want you to love what we do. We want you guys to love what you do, okay? And to go and tell everybody else in the trading community. And we're trying to disrupt what has been financial education, where everybody sells you something. Okay, it's disgusting. Just go in there. It's TheoTrade.com/all. Not to mention, we can help you. Somebody always asks, I can't get approved for options because I'm new. Can your class get me approved? Of course. All right. We've actually got a relationship with the brokerage firms, several major brokerage firms now. It's not just TD Ameritrade. We've got relationships with a number of key brokers, and I've expanded this drastically in just the last couple of months. Why have we actually done that? Because we want to give you flexibility, variability. We don't just want clients necessarily from one firm, but we have commission discounts. The commission discount at TD Ameritrade is pretty good. All right. You have to actually ask us what that is. So somebody says, do I go in here? Okay. And do I just sign up? Yeah. You literally click add to cart. It's TheoTrade.com/all. So if you can't get approved for options, we can help you get approved for options. Everything that I've talked about in every single class, even in the archives, can be done in an IRA. Okay. People always ask me about the day trading margin rule. We can help you work around the day trade margin rule. Another question that inevitably comes up is, if I can't make anything live, okay, at TheoTrade, every detail of every single day is archived. If you miss something, you can go back. Literally when I say every detail of every single day, all right, I mean, today was a day. And you can actually go into the archives and you can look at what we did today. This is July archive. All right, I can click directly into the July archive. Well, here's today. It's July 17th. And sure enough, if I click on that, everybody's session is in here. Okay. And you can see it's myself. All right. At the open, we actually had Matt in there today. Tony Rago. By the way, Matt's brand new. Nobody even knows who Matt is. I didn't even put him up there yet. Okay. We're bringing on several new instructors right now. Why? We're expanding. We have over 2,000 people right now. Okay. In here. And we're about to expand up to 7 full-time instructors. So nobody has got, again, the capitalization to be able to compete, the number of instructors, okay, and the technology. I mean, again, what we do here is detailed criteria in each and every strategy. All right, kind of continuing on along the questions that typically come up. So if anything you need, okay, access to, it's all recorded. Again, another question that inevitably comes up is, you're so new to options, are you going to be able to follow along with the class? That's why we actually have that start here section, is to walk you through some of the basics. And I want you to know, you sign up for the $99. Yes, you have access right now. Go in there and, listen to the risk twist spread class tonight. Okay. It's archived already. Now we're going to do, again, more classes in the near future. And by the way, some of the classes we have actually kind of scripted out for the next, couple of weeks. Again, that it's going to be shocking, okay, to you how much we are capable of doing in a short period of time. And as I keep saying again, I'd rather overwhelm rather than underwhelm. We've also got a couple of new indicators and scans that we're working on currently. Continuing on over there, so if you're basic in options, we will ramp you up, right? In fact, I'm even bringing on an instructor right now, okay? And the instructor's express purpose is to get people ramped up to understand this stuff. Now, you don't have that much time, okay? And you work full time. Can you do this? Of course. The risk twist spread specifically, you sit back, let things actually work for you. All right, the risk twist spread only has to be put on 4 times a year. You can even select entry and exit prices. Now, I see a lot of people are asking a few questions in here. I'll try to answer them one by one, kind of by typing in over there. By the way, if you would like, and somebody said just a moment ago in there, the XLY spread, if you want that, come into chat tomorrow as a member. Feel free to come into chat tomorrow. Just remind me, I'm on the very first thing. I will be on for the first hour, okay, tomorrow. Actually, tomorrow's Wednesday. Ooh, I got lots planned. So tomorrow morning, come in there. I'll actually give you a fresh XLY spread. I'll literally build one for you. Fair enough? The only thing you got to promise me is if I build you a spread tomorrow, in the next month, you got to watch the class because you have to learn how to exit the spread properly. I will continually build you trades. All you have to do is ask. You're in the chat room. You're in there with us live. We can build trades for you. You can bounce questions off us. That is what we are here for. With that, again, I hope to see you in the chat room tomorrow. And if you're in there in the morning at the open, okay, great. If you're not and you work during the day, hey, fantastic. Okay? You can come in there. Again, you can shoot us an email, ask us questions. That's what we're actually here for. We're here to support your learning curve. Feel free to hit us up here, support@theotrade.com. There's our phone number. We're also here to be able to answer questions for you right now live. Again, this site is theotrade.com/ALL. Thanks, everybody, for joining us this evening. Great evening. Bye-bye.